Hey there, welcome to the Guarantee Retirement Guy Show. Today we're going to be talking about why people fear running out of money more than they fear dying. So you probably didn't feel like this when you were younger, right? When you're maybe a kid or even a young adult, you probably feared death more because we probably fear an excruciating death more than we fear running out of money because we're like, well, we're just going to keep working and making money. So how are we going to run out of money, right? But now we get closer to retirement. We're like, okay, I'm going to stop working. My income is going to stop. At some point, I'm not going to have the capacity to keep working. What am I going to do to keep my dignity? Okay, what am I going to do to make sure, like, what if I have long-term care and what if I run out of money? This prolonged thing, it'd just be a whole lot easier just to die really quick. And I do have people reach out to me and they're like, yeah, I've got this all planned out. I'm going to die when I'm 82 and I've got this account balance. I'm going to take out this amount each year and it's going to run out by then. And I'm like, well, what happens if you die at 95? And they're like, well, I don't know. Hopefully I die before then. I'm like, that is a horrible way to look at things. Okay. So I'm going to talk about this. I'm going to share my screen. I'm going to show you how to fix this problem, how to fix this fear of outliving your money. Okay. Because you can set it up where you will never, ever outlive your money. Okay. So you can have the best of both worlds. Live as long as you can and then die, but enjoy high income until that point and not have to worry about running out of money, not stressing about that. Okay. Enjoying the income that you've enjoyed in your working years and have it just continue for the rest of your life. Okay. Wouldn't that be what we all want? Yes. All right. So, and I actually looked this up and I wanted to kind of go through this as, all right, Americans fear running out of money more than dying because losing one's financial security represents a prolonged, tangible threat to daily survival, independence, and dignity, whereas death is an abstract and final event. Okay. Economic uncertainty, high inflation, concerns about Social Security fuel this deep-seated anxiety. And then this talks about, for many, the fear of going broke is a fear of suffering through a long, difficult, and undignified decline rather than the fear of a quick, finite end. Okay? Prolonged suffering, loss of control, a bad death could be just the anxiety, the possibility of an unpleasant death, right? Prolonged by the necessity of medical care, and the individual, whatever they cannot afford is now pushed onto the family. So all these things you might be thinking, man, thanks, John. Really digging the knife in. Okay, well, I'm going to fix it. Okay, we're going to talk about this because I talk about annuities a lot because annuities give us the peace of mind to fix this problem. Okay, because we all are going to be faced with it. Because I'm in my 40s, I don't feel it as much, but I'm feeling it more as I get older because I know there is a certain point where I'm going to really be happy with that guaranteed income for my annuity contracts. Okay. And I know that you will as well. I'm going to show you how this will work. And if you want to reach out to me, you're certainly welcome to. There's a link below this video. There is a link on my website, johnstevenson.com. And I would invite you to go there first and look at the annuities that are available. Okay, work through my calculators. They'll show you everything that's available. Okay, what you can set up for yourself in your state, whether you're single, married, what your age is. It will show you exactly what the contractual payments will be for you. If you're interested in setting up a pension for yourself, I would highly encourage you to go there. And then after you go to my website and you look through that, then book a call with me, then you'll be more prepared. And I'd be happy to sell you an annuity. Okay, I'd be happy to help you find the best one. I don't hold anything back. I show everything that's available. Okay, if my commissions are low and it's the best product for you, you're going to see it. Okay, you'll see it before even talking to me. That's why I tell people go to my website, look through the annuity calculators, and find out for yourself. Okay, they have direct feeds from CanX and from Annuity Rate Watch. Okay, so all of that data comes in and it's updated every single day for you. Okay, all right. So let's look at my screen here and we'll kind of go through this together. Now, I just threw someone in here in Connecticut. They're both 62 and $700,000. Okay. This might be completely different for you. You might have $1 million. You might have 300 grand. You might have 100 grand. Okay. Again, use my calculators and it'll show you what would be the best and you can kind of just decide what you would like. Okay. But for this particular couple, they're like, all right, I'm 62. We want to take income at 67. Okay. We want the highest income possible. Okay. So don't hold anything back, John. All right. Well, okay. I won't. There's a lot of companies in here. Nationwide, Corbridge, Clear Spring, Delaware, and the list goes on. Okay? I'll load some more. There you go. You want Mass Mutual? Great. We'll do Mass Mutual. You want Penn? Penn Mutual is great too. Okay? It just depends on what you're looking for. But the income on these are not as high as maybe some of these other ones. So this one happens to be with Nationwide, okay? And they're almost 73 grand a year, guaranteed. Okay, that's based off of 700,000, and that's for a married couple. Okay, if the spouse is a little bit younger, then this will be a little bit less because they're on the hook for 2 lives and one of them's younger, right? Especially if she's a female. Okay, and then you've got you might be older. If you're older, the income might be higher. Maybe you put it in at age 65 and then you defer it to 70. The income's going to be higher. So if it's a single payout, the income will be higher. That's why I tell people go to my website and look at the annuity calculators because they're going to tell you everything for you. Okay. So, all right. So we'll look at this and say, okay, well, 72,888. That is pretty darn good income. Okay. And I did that with $700,000. Really nice. Okay. I get that for the rest of my life. Don't have to worry about it anymore. So, now it's going to last for as long as you live. Okay. It's going to give you that dignity for as long as you live. The account balance is not going to last, but you're not doing it for that. You're doing it for income. That's what most of us needs to be thinking about. When we're at our retirement age, we're not thinking about so much as growth. We want to convert what we have into income, and we want it to be as much as possible. Okay. So let's take a look. On the guaranteed values, which is the most important, they'll give you $72,888 per year guaranteed for the rest of your life and your spouse's life. And they're also guaranteeing that the contract value, the actual account balance, will last till at least you're 75. And that's based off of absolutely zero index growth with the S&P 500. Okay, probably not likely. They're not giving you all of it, but they are giving you some of it. So let's scroll down to the hypothetical. Hypothetical is we're going to cap you at 6.3. We're going to give you everything up to the 6.3 cap of the S&P 500. Okay, fine. So you give me that. Again, this is a lifetime income product. This is not a growth product. If you want to talk about growth, look at my other videos or book a call. We can chat about those. So 72,888, and the balance lasts a few years longer. That's it. That's the only difference. Okay, but the income, you're taking out over $2.1 million. Okay, that's really good. You can go over here and you can see the death benefit. That lasts for as long as there's an account balance. Okay, so you're not going to lose the money if you die. It's going to go to your beneficiaries. So all you're doing is you're just taking a chunk of your assets, you're putting it into a contract, and you're giving yourself that peace of mind, saying, all right, now I've got my dignity. Okay, now if something happens to the stock market, I don't have to worry about going back to work. I don't have to worry about trying to explain to my kids or explain to my colleagues or my friends or whoever that, hey, yeah, I know everything's going well for my, for my finances a few years back, but now I got to go back to work, right? We don't want to explain that. If we want to golf or we want to spend time with our grandkids, we want to be able to continue to do that without interruption. And so an annuity contract allows you to do that. And this is on top of your Social Security. That's an annuity contract. So this might be in addition to your Social Security, and with that, you might be out of over $100 grand a year. That's pretty good. So you've got that coming in, and then if you let your other assets grow, even if you threw, let's say you got $1 million and you threw 70%, so 700 grand into an annuity, that's the most I would recommend you put in, or maybe 75%. Just depending on your situation and what your income expenses are. But insurance companies don't want you to put more than a certain amount. So you can do that and then let the rest of your money grow. I mean, if you leave the 300 grand in the S&P 500 that you got left, it's going to double in 7 years typically. So 600 grand, and then another 7 years, that doubles to 1.2 million. So in 14 years, you've got $1.2 million sitting there and you still got your guaranteed income. So that, in my opinion, that's my favorite strategy. That's what I do. And so I always tell people about it. It's totally up to you what you want to do, but I do like having guaranteed income over here as part of my portfolio, and I like having some growth over here. So I get the best of both. I got growth. I can continue to stay in the market like I want to, but I can also be retired and stay retired. And the best way to do that is to have my guaranteed income contracts in place. And that's exactly what you're doing. So anyways, go to my website, check out these numbers for yourself, okay? I can go through so many different scenarios. Your situation is different, I'm sure, okay? You might be older, you might be younger, you might defer this out for a shorter amount of time. It might be immediate, it might be deferred out a long term. All of that's going to factor on how much you get paid. And it's important that you check these numbers out for yourself. And I would recommend the Income Rider. The Income Rider will actually pay you the most annually. Rarely does the SPIA or DIA outperform it on an annual basis. But it's totally up to you what you are looking for individually. So anyways, hope you enjoyed the video. If you did, like, subscribe, share, you know the drill. Comment below if you got questions. And if you are looking for an annuity, please go to my website, check out the annuities, and then book a call with me if you feel comfortable. So I'm not going to try to hard sell you in anything. No one likes to be sold. I bought a truck a few months ago, and literally that guy spent 2 hours trying to sell me an extended warranty. And I just had a horrible taste in my mouth for this guy and for this dealership. Like, I'll never go back. And it's because of the way they treated me. And I got a great truck and I was very happy with it. That's what I wanted. But you know what? It's people trying to sell you stuff. It's just slimy and it's horrible. And I hate it. I absolutely detest it. Okay. So I'm not going to try to push hard sell you into anything. I will show you everything that's available. And I do recommend, if you are looking for an annuity, to book a call with me because I'll help you do it. But I'm sure as heck not going to try to hard sell you on anything because I hate it. So anyways, there it is. Anyways, I appreciate you watching. Thank you so much. And we'll see you next time.